Thursday, December 7th, 2023, Monaco 64, home of alternative economics and contrarian views. So the day that will live in infamy, right? December 7th, the day the Japanese bombed Pearl Harbor and basically triggered Congress to declare war on Japan and indirectly on Germany. And that's when the U.S. entered World War II. But it seems to me that this date is becoming also important as a more modern version of the abandonment, so to speak, of the petrodollar. And why do I say that? Well, exactly a year ago, you had Xi Jinping, the president of China, travel to the Kingdom of Saudi Arabia to meet the King of Saudi Arabia and other leaders of the Gulf nations. And it was a very clear signal to the world that China and Saudi Arabia are going to cooperate a lot closer, that Saudi Arabia is hedging its bets. It's not just depending on the United States to sell its oil and to receive dollars for it, that they want to diversify and trade with other people in other currencies. And of course, China is Saudi Arabia's biggest customer. Well, it looks like today, Thursday, December 7th, 2023, the Chinese and the Saudis are intensifying those ties even more. And it looks like the Saudis are looking for China for financing of some big projects. So we're going to look at that quickly. I'm going to refer to an article I saw today about this in the FT. And it plays right along, of course, with the waning petrodollar. Before I do, just like to let you know, and some of you, of course, might find it difficult to buy 1 ounce of gold because it's becoming more and more expensive in terms of fiat currency. So just wanted to let you know, for especially my UK viewers, that gold investments, they have a special on the Britannias, but the 1/10 of an ounce Britannia, if you use promo code Monaco6410th, you will get 1% off the price, the listed price on their website. I'm not sure how long that's going to run for, but I'll keep you posted. And they still have, of course, 1% off 1 ounce gold Krugerrands at Gold Investments. For my North American viewers, you might be able to get through to Oliver at Gold Investments, and he might even ship to you. But you also need to look at my other affiliates in North America, Miles Franklin and ITM Trading. All the details are below in the description of all my videos. So before we look at this Saudi-China, not rapprochement, because they weren't really tight together before and then separated and came back. It's more of a growing relationship. Just wanted to let you know why the petrodollar is so important. I'm sure many of you know it already, but some of you might not know. Basically, it was a deal done between the Americans and the Saudis back in the mid-70s, 1973, 74, thereabouts. And Henry Kissinger, who recently passed away, then Secretary of State, brokered a deal with the Saudis that the United States would defend the kingdom militarily, and it would also help with building its infrastructure. And in exchange, Saudi Arabia would only sell its oil, only in US dollars. And what that did is that forced all oil producing countries in the world to do the same, because Saudi Arabia was the biggest producer then. And that led to a lot of demand for dollars. Even countries, for example, let's say if Indonesia wanted to buy oil from Saudi Arabia, they had to find the dollars to do that, which seems outrageous, but that's the way it's been. So what that did, that helped keep demand for dollars strong. And that was very important because President Nixon had just severed the link between the dollar and gold on August 15th, 1971. So here we have the world's reserve currency going unbacked, an unbacked fiat currency. So this was really important. And what this demand for dollars did over the decades is keep prices under control in the U.S., keep what people call erroneously inflation down. And why is that erroneous? Well, because inflation really is the growth in, it's the increase in currency and credit out of thin air. What people call inflation today is actually the consequence of that. But anyway, basically, America also has had the firepower, the military might to enforce this deal. But in the last 6-7 years, a lot of these countries, especially with Russia and China, they've been trying to move away from this petrodollar paradigm. And why is that? Well, because the United States has been using the petrodollar, or the dollar for that matter, as a political weapon to sanction countries when countries do things that they don't like. And I think these countries that are moving away from the petrodollar, they're doing so not because they want to have their own currency and use it as a weapon, but because they feel that a currency, a reserve currency, whatever you want to call it, needs to be an instrument of trade and investment, not political. And that's why Saudi Arabia is so important, because it's at the heart of the petrodollar deal. And we saw back in 2021 as well, when the U.S. left Afghanistan, that a week later, Saudi Arabia did a military security cooperation deal with Russia, because it said to itself, how can we depend in the United States for our security? Look what they did in Afghanistan. They were there for 20 years and they left really quickly and left the place a mess. They could do the same to us. So now to the article here that came out today. And I guess you probably won't see this in the mainstream, like TV, business maybe, or even mainstream media, or in normal newspapers. But this is really important. And of course it is in the FT, but they're having to acknowledge this. So it says China deepens ties with Saudi Arabia at Hong Kong gathering. Beijing and Riyadh are expanding their economic relationship as they seek to reduce reliance on the U.S. and its allies. So, of course, I've been covering this kind of topic, move away from reliance on the petrodollar, since 2016. And a lot of people thought, oh, this is never going to happen. And I said, it's going to take time. I remember in one of my videos back in 2016 or 17, one of my best videos in terms of views, that, I was warning that China was going against the petrodollar. And some people at the time said, oh, nothing's happened to the dollar. And I said it's going to take time, because these things take time to work out. But it looks like it's accelerating now. And what that's going to do is going to decrease the demand for dollars even more. So let's quickly go through parts of this article. It says here, China's Vice Premier He Lifeng told Hong Kong's elite last month that he had some suggestions for the territory, a list that included building closer ties with the Middle East. Hong Kong should further expand its circle of friends by developing relationships in the region, he said. This week, it is taking an important step in its effort to do so. Saudi Arabia's Future Investment Initiative Institute, which hosts the Gulf states' so-called Davos in the Desert Conference in Riyadh, opened its first Asia gathering in Hong Kong on Thursday. So this is this big institute in Saudi Arabia, which hosts their Davos. They're doing their own conference in Hong Kong. I think this is huge. It just goes to show how committed the Saudis are to have a relationship with the Chinese and Hong Kong in this case. It says John Lee, the city's chief executive, said in a speech he was very delighted that Hong Kong was hosting the event, adding it was yet another magnificent step forward in deepening ties between Hong Kong and the Middle East, particularly the Kingdom of Saudi Arabia. Yasser Al-Rumayyan, the governor of Saudi Arabia's $700 billion public investment fund, is in Hong Kong for the conference. So, am I trying to big up these countries and say, oh, this is great? No, I'm just trying to tell you what's happening out there in the big wide world and how it will affect not just Americans, but people in the UK as well, as there's going to be a lot less demand for our currencies. It looks like these countries, they want to deal with each other, cooperate, while we in the West just want to punish countries. We want to pontificate and tell them what they should do. And it looks to me that these guys, they just want to do business. Unfortunately, we've kind of lost, that side of things. It says the event, which comes a year after Chinese President Xi Jinping visited Saudi Arabia on a trip Beijing hailed as an epoch-making milestone, is the latest sign of growing economic ties between the two countries as they seek to reduce their reliance on the West. So there you go. And I'm sure when Xi Jinping met MBS and the King of Saudi Arabia a year ago, they probably said, oh, maybe in a year's time we'll meet in Hong Kong, or we'll have something in Hong Kong. You can almost see that. But one thing that really caught my attention here, and I'm going to end it here, I'm not going to read the whole article, is this part. High on Riyadh's wish list from that relationship is investment from China. So that's probably where China is also going to recycle some of its petrodollar. It's not going to be buying treasuries or buying U.S. investments. It's going to be selling those dollars and buying or investing in Riyadh or financing projects there. And I think that's really interesting. Even as China's economy slows, Riyadh has committed to costly domestic infrastructure projects, including hosting the 2030 World Expo and the Men's Football World Cup in 2034. Goldman Sachs estimates the Gulf state could spend about $1 trillion by the end of the decade on sectors ranging from clean technology to mining, and to its plan to build a futuristic city called Neom. I've looked into that Neom and personally don't like it, but be as it may, there's going to be a lot of investment and a lot of money coming from China, it seems. Where's the money going to come from? The emerging market investor said, enter China. Direct ties between Riyadh and Beijing were strengthened when Saudi Arabia sent one of the biggest official delegations to China's summer Davos gathering in June, but Hong Kong still acts as a gateway for finance and investment. So there you go. And you can expect more news like this, not just between China and Saudi Arabia, but between China and other what you might call global south countries or emerging market countries or BRICS plus countries. And that, in my opinion, is going to further decrease the demand for dollars. And that's why things are going to get more and more expensive for Americans, not because prices are going up, but because the dollar is going to be losing value because there's too many dollars out there and not enough demand for it. It's just a simple law of supply and demand, the law of economics. And I have a little anecdotal story about that. My sister, her daughter lives in Florida and has lived there for years. She's married to an American. And my sister lives in Switzerland, but she goes every year in November to spend some time with them, with her grandchildren too. And she told me this time, I went to the supermarket to buy a few things and I couldn't believe it. It was $300. Yes, she bought some steak and stuff, but she said this used to be like $100 or $150. So, and the other thing as well, going from Europe to the US, we always used to find that things were a lot cheaper in the US. But she said to me, it's not worth buying anything in the US anymore because in Switzerland, it costs the same now. So there you go. Let's look at where the markets are then this morning. It's 8:34 a.m. London time. We got spot gold at 2,031. It's up about $6. High's been 33. The low's been 22. So what's happening to gold? We had that huge spike overnight from Sunday to Monday. We traded up to almost 2150 and then it came down sharply the same day. Well, I read Michael Oliver, he's a technical analyst, and he said if every time you had a key breakout like gold did that day, and it worked and it kept going up, he said every Tom, Dick, and Harry would be rich. So I think that breakout, yes, it could have been a false breakout, but we still need to wait and see. But I think it still looks good. I think tomorrow's non-farm payroll number might decide in the short term what gold might do. So we'll have to wait for that. And long term, of course, with what's happening vis-a-vis the petrodollar, there's no other place really to be, in my opinion, than gold and silver as well. Of course, silver still has a lot to do in terms of catching up. So what about silver? Well, silver is back just below 24, and I think it's testing a really key level here, and it's kind of holding for now. So we're up 5 cents at 23.95. High's been 97, low 77. The stock market futures are virtually unchanged, so I won't go through them. The currency market, we got sterling up 0.2 at 125.80. We got the euro up about 0.2 as well at 107.80. We've got the dollar down quite a bit versus the yen. It's down over 1.3% at 145.30. I saw that the head of the BOJ said that things are going to get difficult from the end of the year till next year in terms of policy. Maybe that's had an impact on that currency cross. The yuan, the dollar's down 0.25% versus the yuan at 715.75. Aussie dollar is up 0.2% at 65.60. The dollar is unchanged versus the Canadian dollar, just below 136. The Kiwi dollar is down quite a bit, actually. Oh, no, sorry, looking at the wrong one there. Kiwi dollar is unchanged, 61.34. Let's check the commodities. We got WTI crude up 0.75%, trading at 70. So we've come off quite a bit in crude oil in the last week. Brent is trading at 74.85. That's also up 0.75%. We've got platinum up $6, trading just below 900, and high-grade copper still stuck around this 375, 380 level. not really moving that much. It really needs to break back above $4, I would say. And to finish off, the 10-year yield, yes, that has been coming off a bit, quite a bit. Right now it's at 4.15. It's up about 4 basis points though. So with that, I'm going to wish you all a very good day. Take care. Bye.